Well, welcome, Willie. Today I have Willie here from Military Mortgage Pros, right?
Yes, absolutely.
And so, don't let the military part, fool you. You work with all types of buyers, is that right?
Oh, absolutely. Really focus on do a lot of business in Northeast Florida, but really the whole state of Florida. We
Yeah.
also lend money in Alabama, Georgia, and Virginia. Kind of our niche over the years, probably about 50% of our business is military.
Okay.
We really like serving those that, give us the opportunities to live the lives that we live, but we also deal a lot with, first-time home buyers, move-up buyers, investors, everybody.
Yeah,
So if they need to borrow some money, we got them covered.
of course. And how
Uh,
long have you been in the mortgage industry? And tell us a little bit about your experience.
yeah, it's 2.5 decades now. When
Wow.
I started in this business years ago, like I just really could have never foreseen, really being in this business this long. But it's been great for me. It's been great for my family. And the crazy thing about it is that, just being able to help people and affect their lives in such a profound way,
Yeah.
giving people and helping them, get that little slice of the American dream and that American pie through home ownership, is something that's been an absolute blessing for me and my family.
I love it. Love it. And so, let's get started with this. I think our audience here today would probably be first time home buyers. I really want to talk about this new program, right? That
Yeah,
was just released for all these first time home buyers.
absolutely. Absolutely.
And tell us a little bit about it because I know a lot of people that are looking to buy a home for the first time, they don't know the way.
That's right.
There's no guide for them unless they have, a good mortgage professional and a
That's
good
right.
realtor that can work together to find a home.
Yes.
And
Yes.
what I think most of their worries really is money, how much money they need to save to
Yes.
buy a
Yes.
home. And they don't know
Yeah.
about programs like these that
Yes.
can help them get a home for little to no money almost, right?
Yeah.
So
Yeah.
explain a little bit to us.
So, the one thing about the Hometown Heroes program is kind of real hot right now. It's out there. You're seeing it on a lot of platforms. A lot of people are actually speaking about it.
Yeah.
I'm blessed to be on the lender advisory board for the state of Florida. So that program that I know behind the scenes, there's been a lot of blood, sweat, tears, lobbying, and all those good things to be able to make that money available. So
Yeah.
now, basically, anybody in the state of Florida that's a first-time home buyer, and they are working for a company that is Florida based, has some type of brick and mortar here, they're eligible to receive 5% of their loan amount up to $35,000. And that money can be used towards down payment and or closing costs. So, just for Americans, period, down payment and coming up with money for down payment and closing costs still continues to be one of the biggest challenges that Americans face.
Yeah.
Quite frankly, there's a lot of Americans still think you need 20% down. But
Mm.
these down payment assistance and grant programs, what they do is they close the gap, and it really lessens the amount of money that they have to bring into the transaction. It is
Yeah.
a absolutely phenomenal program.
And let me ask you this. Say, Florida's a transient state. We have
Right.
people come in from other states over here all
Absolutely.
the time. And so
Absolutely.
if someone has a contract for a job and
Hmm.
they want to apply for this loan and
Uh-huh.
their job is based here in Florida, can they do
Uh-huh.
that?
Absolutely. There's four criteria that they have to hit. Number one, they have to be a first-time home buyer, and that's a little tricky because it's a broader scope than you think.
Hmm.
The first-time home buyer is defined as anyone who has not owned a primary residence within the last 3 years. So the key is primary residence. So technically speaking, they can own a property somewhere else as long as it is not a primary residence and still qualify for the program. So you
Okay.
have to be a first-time home buyer. You need a 640 credit score. Your debt to income ratio needs to be under 50%, and you need to be under the income limit for the program. When in most counties in Florida, the family can make over six figures and still qualify for the assistance.
Okay. I know you mentioned too that you were lucky enough, fortunate to be part of this program.
Uh-huh.
And any lender just, you offer this to their clients or no?
Yeah, not all lenders are offering the program. There is a certain amount of training and vetting that you have to do in order to be able to offer it. Now it is there's a good group of folks that do qualify for it, but I would like to think we specialize in it.
Mhm.
We help a lot of first-time home buyers, and we, help a lot of folks take advantage of this money because believe it or not, a lot of times these funds, as much as we hear about it because we're in the business, there's still a lot of folks don't know that this money is available to them.
Yeah. And
And
that's,
again,
yeah.
it's something that can really get them down that path to home ownership, and help them relieve some of the financial obligations that you have to, that are there, when you're purchasing a home.
Yeah. And does this money, I know people are always worried about money. That's the first
Yes,
thing on their mind. And
yes,
so
yes.
do they have to pay this money back? How does this work?
Yes, it is a repayable grant. And the good thing about it is, with it being a repayable grant, what it means is the program is going to continue to replenish itself over the years. So the program is zero interest on the grant part. They pay no
Wow, that's
interest on
really
the
good.
grant portion, right? And they
Yeah.
don't pay the money back until they sell or they refinance the house. Those are the main two components.
Okay.
They
And
they don't pay it back until they sell or they refinance.
is there a minimum like amount of time that I can hold? Say I can hold for the rest of my life, buy a property,
Absolutely,
live there,
absolutely.
and never pay this money back?
Well, again, at some point you're going to sell or refinance typically,
Yeah.
and that's when the money's come due. But the thing that the clients have to understand is they're using this money to purchase something that's an appreciating asset,
Yeah.
right?
Of
So when
course.
you go in and you're buying something, and you're getting, let's just say you use example of $20,000, you get $20,000 with the program to go purchase a home that's $400,000, and you stay there for 10 years. Even if we say conservatively, now that house is worth 500,000. Well,
Yeah.
out of that $100,000 or more equity, you pay that $20,000 back. You still made a boatload of money. So
Yeah.
one thing I want to make sure that our listeners don't get caught so much up into, hey, I'm going to have to eventually pay it back. You're going to pay it back out of the equity that the property has earned you. And it's
That's really
still
good.
a better situation to be able to take the grant, purchase
Mhm.
something that's going to start growing in value and appreciating and making you money, versus continuing to just throw that money down that black hole of paying rent.
Yeah. And I know this grant was, given this Hometown Heroes program was limited to only some occupations,
Hmm.
last year
Uh-huh.
and even now until June, right?
Right,
And
right.
now I heard, I don't know if it's very true, but you
Uh-huh.
can you can confirm the grant is limited, right? So I think the funding program was only 100 million last year, and it's the
Correct,
same this.
correct. Correct. They
Okay.
replenished it again as of July 1st. July 1st is when it became available again. And then everything took effect on July 3rd, which was the first business day. So the money is available now, but it's tough to say how long it's going to be available. And it's tough to say, after this next round of money, is used, are we going to get it again? You just don't know, because now you're dealing with legislation and all that other stuff.
Yeah.
So what I would advise clients that, hey, if you feel that you're ready and you have any desire to buy, and that you're in a position where you could use a little bit of help, act now. Don't wait. Because it's really difficult to say exactly how much or how
Yeah.
long the program is going to be available. And then once these set of funds, are used up, you know how are we going to get any more, or how soon we could potentially get more.
Yeah.
So
And
you
was
want to act now.
and was the first round last year, did they run out? Did that first
Yeah,
fund
yeah.
run
Oh,
out?
that money
Okay.
spent. Yeah, yeah,
Yeah,
yeah.
and
They
how
they
long did it take?
it's tough to say because they don't give us the exact point where it went down to
Uh-huh.
zero, but it was pretty much within a year, you know.
Okay.
But I feel like, honestly, this second time around, way more people know about it. So I'm thinking that $100 million is going to go,
Yeah.
pretty fast.
And I think to add on, they opened this up to
All
most
occupations.
all
Absolutely,
occupations.
absolutely.
Before it was
So
very limited, right?
exactly, exactly. Last year it was more military, first responders, medical workers,
Mhm.
military, law enforcement. It was
Yeah.
some very specific occupations that were qualified. Now they've
Yeah.
opened it up to any occupation, as long as it's a Florida-based business.
Mhm.
So that's really opened the floodgates as far
Yeah.
as who's eligible. And it's another reason for those that are interested in the program. hey, it's time to hit the ground running, because again, we don't know how long the money's going to last.
Yeah. And it's basically free money,
Yeah,
right?
right, right,
They're
right.
basically giving you money to buy something. And
Absolutely.
if you're going to rent a home
Yep.
or rent, an apartment,
Hmm.
I think at the end of the day, you'll probably pay more to rent
Yeah,
something, right?
yeah. And the other thing about it is, it's really very basic math. If you're
Yeah,
going to go in and let's say you're going to rent now for 2,000 a month, which, here in Northeast Florida specifically, that's not a big stretch, $2,000 a month, right? So
right.
every year you're talking about, that's 25,000, $24,000. If you rent for another 4 years, that's $100,000 that you
Yeah,
have nothing to show for. Well, why not take that same money and be using that money to be paying a mortgage, where again you're building equity, you're
mhm,
building, an asset that's going to be able to help you with your long term, with your
yeah.
financial future. It makes sense even when you just use very, very basic math.
Yeah, I see it more like a stimulus check,
Yeah,
but
yeah,
they tell
yeah.
you
It's a
like,
good way to
hey,
look at it. Yeah.
but you need to buy a home with this stimulus,
Correct.
check, right? A lot of
Correct.
people blew money, blew, the $1,400, how much ever they got
Absolutely.
in something
Absolutely.
else. But this is like a smart way for you to invest your, the money that you're given, right? So if
Absolutely.
you qualify, you can build equity in years to come, and you won't even have a problem paying that money back because it'll be in
Absolutely.
equity, right? And
Yeah,
without issue the home too.
it's one of those things where you're going to have a living expense, and why not focus on buy? And again, it's just a big difference between, our folks that are listening to this, the difference between spending money on an appreciating asset versus a depreciating asset, right?
Yeah, of
We spend money
course.
on things all the time that are not going to go up in value, and a lot of times go down in value over time. When you're
Yeah,
talking about purchasing a piece of real estate and it's something necessary, basic human function, human need is for housing, right?
yeah.
So if someone is going to give you a grant to help you acquire, one, that fundamental need that we have with housing, and then on top of that, help you purchase something that's going to make you money over time,
Mhm.
it makes a lot of sense. It's a very
Sure does.
smart financial decision.
Yeah. That's very good. That's very good. And one last question for you, with all the experience you have
Hmm.
and the way that the market is going right now, I know a
Hmm.
lot of people, when buying a home, they're worried about interest rates. And
Hmm.
I talk to people all the time, and that's an objection I get all the time.
Right.
And so what would you say to these people when
Right.
they tell you, no, I'm gonna wait because interest rates are way too high right now?
Yeah. So, it's a couple of things. It's one, we have to put it in context, right? A lot of folks are comparing what interest rates were the last couple of years, and that just wasn't what we went through. A worldwide global pandemic, unlike anything we've ever seen. So when we're comparing interest rates to what they were during that time, it's just not a reasonable comparison. I can tell you for a fact, when I got into business again 2.5 decades ago, rates are even higher than where they are now. The
Yeah.
biggest things that folks need to focus on is buying something that is affordable. Nail down and focus on what you can afford as far as your monthly mortgage payment. And we
That's
break
good.
it down basically into 4 steps. We want all of our clients to, one, establish your budget. Know what type of income you have coming in, know what type of liabilities you have going out, and know what you're comfortable with as far as a monthly mortgage payment. And then you don't buy a house that's going to put you outside of that budget that you're comfortable with.
Mhm.
Number two, understand what your long-term and your short-term financial goals are. You may be purchasing this property, and in a couple of years you want to make it a rental. You may be purchasing this property and you're going to renovate it. You may purchase this property and say 5 years from now you're going to sell it. Whatever the case may be, know your short-term and your long-term financial goals.
Yeah.
Number three, establish your relationship with your lender and your real estate professional, and get a mortgage plan that's specific to your situation. Like, everybody's situation is going to be different as far as what mortgage works for you. And then get your team, again, your lender again, and your real estate professional that's going to help you execute that plan. So if you
Mhm.
have a budget, you have goals, you pick the right mortgage, and you execute, regardless of what's going on with the interest rates, you're going to be able to make a great decision for you and your family and be able to go in and buy a property that's
Yeah.
going to help you build that long-term wealth.
That's really good. That's really good. And a lot of lenders, even realtors, when a client is talking to them, I think one of the biggest issues that they have is communication.
That's right.
And I see your testimonials all the time.
Awesome.
People saying that you are available all the time to speak to them, explain everything.
Mhm.
And would you say that that's your biggest differentiator when it comes to, competing against all these other mortgage loan professionals?
Yeah, and I'll say this candidly, there are mortgage folks on every corner. You Google mortgage and you might get 100 pages of results.
Yeah.
But the key is you have to work with someone that, one, has your best interest in heart. And after talking to somebody about 2 or 3 minutes whether they have your best interest in heart or not.
Yeah.
And then making sure that, again, you're getting with someone who has a specific plan, who's going
Mhm.
to educate you, who's going to get your question, who's going to answer your questions in a way that you can understand and be able to work with you throughout that transaction, and many times for transactions down the road. I've been in the business long enough now where I'm blessed to have helped clients and now clients' kids,
Yeah.
and what it boils down to is, give people honest advice, give people advice that's best for them and their situation, and let the good times fly from there. So you
Yeah.
have choices. Everybody has choices, but you want to be able to work with someone who, again, has you and your family's best interests at heart and is going to, again, help you with the budget, help you with long-term, short-term financial goals, put you in a situation specific to your needs, and then, very importantly, help you execute.
Yeah.
Help
I
you
like those
get it
criteria
done.
you have. Really good.
Absolutely.
And
Absolutely.
do you sit down with your clients and you guys go over, budget and
Yeah.
everything?
Yeah,
Okay.
absolutely. It's
Yeah.
one of the
See,
things.
that's why I asked you the question.
Yeah,
It's
it's one
different.
of the
You're very
things.
different.
Yeah, it's one of those things where, you know, and and it's with any financial decision. Let's pretend that we aren't even talking about a mortgage, right? From a budget standpoint, buying a car, going
Yeah.
on vacation, planning a wedding, starting a business. Any great financial decision has to start with the budget. If
Yeah.
you don't do that, you're setting yourself up to really be in a pickle.
And Willie, a lot of people don't know, they get overwhelmed with so
Right,
many, information that they need to provide and look up
right,
for for a mortgage
right,
loan.
right.
And what no, just so we can get an idea, what type of documents is needed for loan approval?
The great question. And I'll tell our listeners this: get yourself organized. You're coming to the bank and looking to borrow hundreds of thousands of dollars.
Yeah.
We're going to want to know what color socks you're wearing, right? So be
Right.
prepared and understand that it's not about you, it's about the process. So, a few things that you're going to need for sure. You're going to need your W-2 forms for the last 2 years. You're going to need your pay stubs covering the last 30 days. You're going to need your bank statements covering the last 60 days. Get your hands on your tax returns for the last 3 years. You may or may not need them, but if we do need them, we want that to be available. A good copy of your ID. If you get any type of fixed income, whether it's disability or child support or alimony or anything like that, have the paperwork together. For
Okay.
our self-employed people, it's no problem. Get your tax returns together, get your profit and loss statement together, get your balance sheet together. Understand this: the bank wants to lend you the money. This is what we're in the bit. I want to give everybody a loan. It's what I do, lend money.
Yeah.
But what you have to do is make sure when you come to us, you're prepared with the necessary documentation that's needed for us to be able to give you the loan. We want to tell you yes. Make it easy for us to tell you yes by providing the financial documents that are going to help us make a great decision for you.
Yeah, and that leads me to ask you another question. So
Uh-huh.
I have a friend, a close friend of mine, and she just started a new job. She's very young, is getting
Hmm.
married, started a new job, and she
Hmm.
doesn't have, her tax returns for the past 2 years.
Mhm,
And is there a way around that if she's a teacher, let's say, and she wants to go through this program and
yes.
has a contract, say, for 2 years at her job?
Yes. So everybody's situation is completely different. What the bank is looking at most heavily is the last 2 years. But if it's a situation where you don't have 2 years, okay, where you're in school full time, right? Where you doing, working in a different career, it's the bank has guidelines, right?
Yeah.
But within those guidelines, again, we want to do what makes sense. Happens all the time where we may have a teacher that's, just got out of college. This is their first position. They have their contract. They don't have the 2 year work history, but they're showing us for the last 2 years they've been in school and they have a teaching contract. Come to us. It may be an opportunity for us to be able to still make that work.
That's good.
So another thing that we hear a lot is, hey, I haven't been on my job for 2 years. That's another thing that's a huge myth. It's not that you have to have been on one job for 2 years. We're just looking at a 2 year job history. So if there's anyone that has any doubt, reach out to us. Let us talk about it. Let us
Yeah.
be able to say, hey, listen, you are ready right now. Great. This is what you need to do next. Hey, you're not quite ready yet, but this is what you need to do next. No matter what side of the street you're on, no matter what lane you're in, we're going to give you a very clear plan on what you need to do to get to that goal of home ownership.
That's good. And no commitment, right? Just an
Right.
inquiry, just a talk like
Absolutely.
we're having here.
Absolutely.
Yeah, that's
Absolutely.
really good. Okay, well, thank you very much, Willie. I really appreciate you taking the time and
Oh, no problem at all.
talking to me about this and educating some people and that are interested in buying a home. And so I think we can wrap up here and yeah, that's it. Well, thank you very much, Willie, and have a great rest of your day.
Absolutely. It was wonderful speaking to you and I look forward to us doing this again sometime.
Yes.